Hey, it's Sunday, July 8th, 2018, and we're taking a look at the S&P 500. And we're going to take a look at um, the bounces that we've seen so far this year, the percentage, and a little bit of a bearish pattern that I'm seeing setting up, but a very quick and easy way that we might be able to unravel this bearish pattern. Looking at this chart of the S&P 500 so far this year, on the left side over here, we see that we came out of the gate and started the year with this very strong rally that led us to 2872 for our all-time high, and then we fell off this cliff and worked our way all the way down to 2532 for the 2018 low. From that 2018 low, we bounced a grand total of 10.65%. And this bounce topped out in March of week 3. And here begins a pattern. And this pattern started as Powell took over as chairman of the Fed. He took over and did his first meeting and first press conference in March. And from here, we began to see this pattern taking over, where the third week of each month, right about the midpoint of the month, um, week 3, which is OPEX week, which is also Treasury and bond auctions, a lot of that going on that week. So it's a very busy week on all the different markets, not just stocks and not just equities, but also bonds and Treasuries. So we've seen our highs sort of top out on that week 3 of each month, and our lows kind of come in either on the very last day of the month or the first 1 or 2 trading days of the following month. So we've got a pattern of topping out, bouncing and topping out at week 3 and falling back, hitting our lows at either the last trading day of the month or into the first 1 or 2 trading days of the following month. And then once again, here was our bounce, tops out April week 3. We fall back to right around one of the first trading days of May, setting our swing low. We bounce, we hit our high May week 3. In May, it was kind of interesting in that we hit our high May week 3. We pulled back, and then we tried to come in May week 4 and make a higher high, but that got squashed back down. And here we went back down to our low for the month. Our next swing low comes down right around the last trading day of the month. We bounce one more time to June week 3. Once again, third week of the month, hitting our high, and we fall back and right at the end of June, one of the last trading days of June, we hit our swing low, and then here we are right now working our way up in a bounce. Here is our timeline marker for July week 3. And I just sort of randomly chose Wednesday of that week because all of our bounces seem to happen on, seem to top out like around Tuesday or Wednesday. So middle of week 3 of each month. So here would be July 18th, would be Wednesday of OPEX week, July week 3. And I'm drawing sort of a target here right on this 2810 level. So let me explain where this comes from now. Okay, so this first bounce that we took here from 2532 took us up 10.65%. That ends up also being our final month for the quarter, March week 3, but also the final month for the quarter. Our very low point for the quarter sets us up here on for Q2, ends up being our back test low, 2553 versus 2532. That was the very first trading day of April and of Q2. Our next bounce, though, starts up this bearish pattern. So here we are in Powell land here once we get past this bounce high of March. And here's this bounce, only gets us up 6.45%. And then we fall back. Our next bounce, only 5.74%. We fall back. Our next bounce, only 4.32%. And not only that, but this was our high for Q2, and it was only a gain of 9.35% for the quarter from the low of the quarter to the high to the high of the quarter here was only 9.35% versus the bounce that we saw back here in Q1, uh, which was 10.65%. So we've seen lower bounces each month, and then ultimately we saw a lower bounce for the quarter as well. So here we go. We fall back to this 2692 level that we printed on June 28th. And if we are going to um, do something higher than 4.32% of a bounce, we need to shoot for this 2810 level. What's also interesting about this 2810 level is that it would take us out past this high that we made back here in Q1. So, in my opinion, this might be, a small strive in the right direction that people aren't expecting. This might be something that's in the algos, that's written into the programming, and this taking out this 2810 level might drive us much higher. We might end up, foiling out this pattern because we've not only taken out and made a higher percentage gain than we have for the last 3 months in a row, but we've also taken out the high that we made back in Q1. So then we have a really good fighting chance to go after this all-time high that we had set in January. And perhaps going after that. Now, so be it if we approach this high and we can't take it out. We can't take out if we make it past 2810, but we can't make it past 2872. So be it. Maybe we have the ultimate double top and we have a really juicy spot to get short and trade on down and maybe go after back testing something as low as this low here. Have your 2532, have your 2553, and maybe one more shot inside the the 2500 handle. A lot of people really think that that's what this was here with the May low, but perhaps we need something that's in between these two levels or a lot closer to this 2553. So anyway, just some thoughts, and keeping in mind that our week 3 of July tends to be our timing wise when we need to get things done. So let's see if we can push even higher than, if we can target 2810 or maybe even push higher to get us as high as we possibly can, perhaps even trying to take out the all-time high before we get to that quantitative tightening point where we always seem to fall off a nasty little cliff and trade down a few percent for quantitative tightening for the month. Okay, hope this made sense. If you have any questions, just let me know. Enjoy the rest of your Sunday. As always, good luck and good trading.